In 2021, Russia was the third largest source of EU imports and the fifth largest export destination. After the start of a full-scale invasion of Ukraine and several packages of sanctions, trade volumes between the EU and Russia have declined. For example, the Federation's share in imports fell from 6.4% to 3.8% in February-September 2022, while exports decreased from 2.3% to 1.1%, writes Politico.
In the first days of the war, the EU took action to interdict Russia's access to the EU's capital and financial markets, and leaders quickly agreed on sanctions targeting the financial sector, energy and transport, and goods that can be used for military purposes. Dealings with the Russian Central Bank were banned, and several banks were cut off from the SWIFT international payments system. Arnaud Busquets, Guardia, and Charlie Cooper, economic observers, in an article for Politico.
The EU embargo on seaborne Russian oil came into effect on December 5th. In addition, the Council of the European Union decided to set two price limits for oil products from Russia from February 5th. It is $45 per barrel for dark fuel oil tar bitumen and $100 for light gasoline, kerosene, diesel oil products. Russian refineries are preparing to cut production by 15%. In January 2023, due to the introduction of a price cap for Russian oil, revenues from its sale decreased by 30%. According to the International Energy Agency, in January, Russia earned from the sale of oil and gas by 8 billion euros, less than in the same period last year.
Russia's oil exports are declining now, as we have forecasted, and will decline further the first quarter of this year and beyond. But more importantly, looking a bit longer term, I believe Russia's oil industry will face huge challenges. Leave aside the sanctions, price caps, in order to deal with the decline rates of the existing fields.
Despite the sanctions, trade with Russia is not declining everywhere. According to Politico, the key factor explaining why imports of the EU from Russia have not fallen even more is energy and their price. The aggressor country has found loopholes through Armenia, Kazakhstan and Turkey to continue trading. This is known in the EU and are looking for ways to prevent this.
I think it's very important to look at the loopholes. And the loopholes, if we look at statistics, you see countries such as Kazakhstan, countries such as Armenia, countries such as Turkey, where certain kinds of trade is going up very high, disproportionate to what it has been in the past, and it seems quite clearly that traders are finding ways to legally trade goods, say with Turkey or with Kazakhstan or with Armenia, which are then re-sent to Russia because these countries are not adhering to the sanctions regime.
President of Ukraine Volodymyr Zelensky, during his speech at the Ukraine-EU summit, also pointed out that the pace of the EU sanctions campaign against Russia has slowed down a bit and should be accelerated.
We discuss new sanctions against Russia, including the 10th EU sanctions package. It is a common European task to reduce Russia's ability to circumvent sanctions. The faster and better this task is carried out, the closer we will be to defeating the aggression of the Russian Federation. We now see that Europe's sanctions pace has slowed down a bit, while the terrorist state, on the contrary, has increased the pace of adaptation to sanctions. It's worth catching up, it's worth fixing. We believe that we can do it with you.
Russia needs to prepare for the fact that the trend of negative growth of its economy will not stop, but will grow more and more, economist Ivan Us believes. Since February 15th, the introduction of marginal prices for natural gas in Europe is expected. Plus, the second source of income in the Russian Federation, taxation, is drastically reduced. According to official data, in the third quarter of 2022 alone, the outflow of funds from the country increased 26 times compared to last year's figure.
Due to the fact that oil and gas revenues have decreased in Russia, the tax base has also decreased. The main source of covering the needs of the Russian state in money is the National Welfare Fund. There were 11 trillion rubles back in October. The big question is, what will happen to this National Welfare Fund, let's say by June or July of this year? Will there be anything at all?
The Russian Federation is trying to trade around the sanctions, but these revenues are not enough to close all the problems that have accumulated in the country, says Ivan Us.
The effect of the sanctions is that people who are going to invest in Russia understand that there is no future in this economy. And when there is no future in the economy, people think about whether it is worth buying apartments, building houses here, and what if it will depreciate in a year, in two, and we will only lose money.
Analysts at the Helsinki Center for Energy and Clean Air Research have calculated that Russia is losing $172 million a day due to the oil price cap. Starting from February 5th, according to experts, losses will grow even more, up to $280 million a day. Reported by Roman Smoler, Natalia Belokudria, UATV News.